You've heard of ICT concepts. You've probably even heard of SMC concepts. But have you heard of PC concepts? In this video, I'm going to show you guys exactly how to utilize PC concepts to increase your win percentage and have an even better risk to reward. The best part about PC concepts, it is so simple compared to the other two I previously mentioned, you're going to want to switch yesterday. This style of trading takes out a lot of guesswork, is extremely easy for beginners, and it's very small account friendly. One of our students took our 2-month free trial, and in that time period, he turned $1,500 into over $15,000. He recently drove up 7 hours just to shake my hand and have a conversation. This is tech. Another one of our members turned $1,000 into over $5,000, only incurring one loss in a single month. So the point is, it's real people, real results. Now it's your turn. So get a notepad, get a pen, make sure you stay until the end because I'm gonna show you one simple tactic that has an over 75% win rate that's personally made me over $7,000 in the last week. Without further ado, let's get right into it. So I stumbled across the PC concepts around 2019, which marks about 6 years of perfection. Really, I perfected it in the last 3 years. And we've had amazing success ever since. So in today's video, like I said, I'm gonna do a few things. One, I'm gonna give you the background on how I even came across this. 2, 3, and 4 are going to be all the 3 types of this concept. And the last one, like I said, it's a completely baller entry condition that I formulated over the last 2 years that added an extra 15% win percentage to my total. Doesn't sound like a lot, but at the end of the year, that could be $50,000 to $100,000 for me. And I've already made over $7,000 in the last 30 days just from this entry condition. Alrighty, let's get into it. So like I said, this setup is immensely profitable and it's extremely accurate. I boasted up to an over 89% win percentage using the strategy, clearing over $250,000 in profit. Now, since then, I've really worked on my risk to reward because that was the #1 KPI that I could have perfected, and I've done just that. So once you guys learn this extremely easy concept, this is gonna be you guys. That's a real picture of me, trust me. And that's gonna be you guys after you understand these 3 concepts. Now first, the background. I've read over 50 books on trading alone. Of those was one key variable. This key variable allowed me to understand that there's emotion in charts, which we're going to get to in just a minute. But through all the fluff, I really figured out the absolute best way of trading, especially for small accounts. PC concepts were formulated for immense small account growth while keeping your drawdown extremely small. So if you're a beginner, this is fantastic for you. It's easy to learn and you can make a ton of money. Now I want to be straightforward and show you both sides. It is only scalable to a certain amount. Odds are I won't make $5 to $10 million in a single year trading this one setup. The liquidity just isn't there, but it is amazing for accounts anywhere from $100 to $100,000. Now in 2019, I was in college and I was trading ETFs at the time, also known as exchange traded fund. These funds move extremely slow. If they have a 5 to 10% swing, that's a large swing. So there really wasn't much profit potential for me, and they were hard to predict. Around this time, I learned about penny stocks. Now, penny stocks are very interesting for one key component. Did you know that over 70% of today's orders that go through the stock market are actually high frequency trading algorithms? This means that you are no longer trading against another user. You're trading against an algorithm. If you think you were going to lose against someone before, you're definitely going to lose against an algorithm owned by a billion-dollar hedge fund with the world's best quants straight out of Harvard. And the percent of orders are only getting larger as years go on. So how do you combat this? Well, you don't trade the S&P 500, you don't trade Forex, you don't trade crypto, you trade small cap stocks. And the reason why I decided to do this is because high frequency trading algorithms leave these stocks alone. It is not worth it for these billion-dollar funds to touch these small fish. They are big fish in a big pond. They do not care about the little fish, nor is there liquidity for these billion-dollar funds to get into these stocks. So for high frequency trading algorithms, they're all sticking to the S&P 500 and what everyone else is trading with immense liquidity, leaving small cap stocks as a basket of opportunity for you and for me. Think about it. If you were to sit in a room with 10 random people that just got into stocks, do you think you'd be smarter than 7 out of 10 of them, maybe 8 out of 10? Well, odds are you'll probably profit from this because you're trading what only humans are trading. And the best part about that, humans are extremely predictable. In fact, you can read human emotion just from the stock chart alone. Absolutely insane. And I'm up over $20,000 on the month with this exact strategy. And at the time of filming this, I'm only halfway through the month. Now, if you're not as excited as I am, just wait for the next step. Now, you might recognize this chart because this chart has been found in tons and tons of trading books. This chart is called the Elliot wave theory. And I've based the PC concepts off of the Elliot wave theory. Now, I know what you're thinking. Dude, I've heard this before. You're gonna tell me 1, 2, 3, 4, 5, A, B, C, D, pay attention. I promise you it's not just that. But if you don't know what the Elliot wave theory is, this theory was created by Ralph Nelson Elliot in the 1930s because he saw a repeatable pattern in the stock market as traders were purchasing and selling stock. Now remember, there was no high frequency trading algorithms in the 30s, so it was a lot easier to trade back then. Because what do we know about humans? The example I give in my 6-week mastermind program, where I work with my students one-on-one and in-group setting every single day for 6 weeks straight, I tell them, if you were in a mall and you saw one crazy person running out of the store screaming, what would you think? You'd be like, that's too crazy. Let's go to Foot Locker and cop some new kicks. But what if you saw 100 people running out of the store screaming? Odds are you probably wouldn't go in that store and you'd turn yourself right around. The same thing goes for stocks. When a lot of people see the exact same chart, the exact same basic pattern, humans end up being very herd-minded. They follow the crowd. So in this example, what it says is the average stock should have 5 waves to the upside and then 3 waves to the downside. Now, I have a whole nother video on this exact theory alone if you want to dive into it, but for today's case, and keeping this video short and sweet and to the point, let's move on to type 1. The PC intraday short. This is one of the lessons I do in my 6-week mastermind program where we actually have a mini movie up front because everyone knows in our group the hype around the PC intraday short. This is the single most profitable strategy in our entire course curriculum, where we boasted millions of dollars in verified profit just from this one strategy. So much so where most of our traders solely end up just trading this exact strategy. So what we do is we look for a stock on the 5-minute time frame. If you don't know what time frames are, essentially what I'm saying is every candlestick that you see in a stock chart is a 5-minute time interval. So this is 5 minutes, this is 5 minutes, then this is 5 minutes. This green wave is 15 minutes tall. So what I'm looking for is a clean 5-wave structure to the upside on a small cap stock. Once the stock tops out, it should be up at least 100% on the day. If the stock isn't up at least 100% on the move, don't touch it. Odds are it's got a lot more gas in the tank. So we want to see these stocks go up over 100% and have a clean 5-wave structure. Let's count it. We have 1, 2, 3, 4, 5, followed by an A, B, C. Okay, this isn't the cleanest example that I've found, but I really liked it because it broke $1 and it was up over 100% in the day. So for me, when I got this lower high right here, I went short. This strategy used to be a long bias strategy only, where I would just trade the 5 waves to the upside and I'd nail the top of the stock. But then I realized it was actually easier to gauge when a stock was going to reverse than when a stock was going to continue higher. So for me, I transitioned this about 3 years ago to a short strategy and came up with a type 1. Let's look at another example. ADN, we have wave 1, wave 2, which is the first pullback, wave 3, which is often the biggest wave of the entire move, wave 4, second pullback, and wave 5, which is where we get immense amount of greed. Remember when I told you that humans are like herds? Well, after the 5th wave, so many traders and individuals are thinking, this is going to the moon, this is going to get 1,000% in the day, I'm going to get rich off this one penny stock, this thing is mooning, everyone needs to get in on it. Well, that is when it's time to short. If that sounds familiar, think about some of the meme coins you've heard from your friends over the years. You bought in, seemed like you nailed the dead top, and then just went down 50% from there. This is no different. I do the exact same thing, except for I short when everyone has peak greed, followed by an A, B, C. Now, the one rule I have on the type 1 is the 5-minute pullback has to either be one candle or it has to be multiple. It cannot be either or. So in the first example, you see that each pullback was only one red 5-minute candle. And then in the second example, we see that they're multiple. This is very important because if you have both, like right here, I would have went 1, 2, 3, 4, 5. But turns out this had a whole nother wave in the tank because these pullbacks didn't match. The size of the waves need to match. So for example, we have 1, 2, 3, 4, 5. So this example is void because the pullback size did not match. So I didn't touch this, and on it went with an extended wave. Put in an extra wave up here. Now the type 2s. The type 2s are our highest win percentage out of all the 3 types. The type 2, some people used to call it the cup and handle formation. I think that is so silly. The point is, you have to understand the emotion and what's going on here. What you have is a stock that rips, pulls on back at least, this is very important, most important part of this strategy. This stock has to pull back at least 50% or more of its original move. So this stock went from $1 to $2, making a $1 share move. It needs to pull back at least 50 cents a share. In this case, it went down about 90 cents a share, pulled back majority of the move, and the more it pulls back, the higher the accuracy you're gonna have. Then as the stock goes up, this stock needs to have a parabolic move to the previous high. What this means is we don't want the stock to slowly grind up there. We want to see the move be extremely dramatic, seeing a wave of greed all the way up to high of day. This is where we short. As you can see, after it got to high of day, buyers picked it up here. They were early adopters. Buyers picked it up here, here, and then this is where a lot of buyers came in. All these buyers had one target in mind. That was over high of day, okay? Psychologically speaking, traders want to see breakouts, especially over high of day. So when the stock breaks out over high of day, I go short. Now I'm quick to cover because if you count the waves, you'll have 1, 2, 3, 4, but we still need a 5th wave. So if we get one more retest over high day and a squeeze, I like to short that wave as well. So I like to double dip on this one. I short over high day, cover it in the first dip. I'm quick to cover. And then as it retests, I add again and we get A, B, C. Beautiful setup. Let's look at another example. This looks like a Christmas tree. Ignore all the noise. All these triangles are me adding short, and then all the green ones are me covering. So you can see I started to size up into this as the stock had a parabolic move. Look at that candle, extremely impressive. After it gave back 90% or more of its move, I went short, I covered on the dip. As it squeezed higher, I went short again, shorted off the pop, and then covered on the dip, having an A, B, C pattern to the downside, making not 1, but 2 times the amount of profit because I did indeed hit it twice. I think I have one more example. Here's one more. This is student Matt in our last 6-week mastermind program. In this day, he made almost $500 alone trading alongside me. So he's young and he's killing it. And of course, in our mastermind program, you also get premium access. So if you guys need assistance in identifying these setups, I got you. I'm gonna call out every single one, as I always do, inside of my premium Discord, where I trade live every single morning. And if there's a trade opportunity outside the live stream, I always make sure to ping your guys' phones. I made over $20,000 this month alone, like I said, all in our live stream. So back to the chart, as you can see, 1, 2, 3, we shorted off that pop as it squeezed through high of day, covered on the dip, re-added on the pop, made money both times. Okay, that is the type 2. Think about a shallow retracement, or think about immense greed as buyers pick this stock up off the floor, trying to have it soar through high day. Well, it soars up to high day and usually not much further, which gives us a great entry opportunity to short and cover on the dip. If you guys don't know what shorting means, remember, this is the act of betting that the stock is going to go down, and as it goes down, we make money. Now, I know what you might be thinking. Jason, I can't short these small cap stocks, or I can't short these penny stocks in my broker. No problem. I have an offshore broker that I do utilize that allows you to short any stock you'd like, and you don't need $25,000 to do it. In fact, the minimum is about $1,000, and you can day trade an unlimited amount of times with fantastic leverage and can short all these crappy stocks just like this. If you guys need help, there's a link in the description to sign up. It's called Hammer. Now, I'm about to show you the type 3, but don't forget, at the very end, I'm going to show you an absolutely amazing trade opportunity. Plus, I'm going to show you live trading examples where I made over $7,000 this month trading this exact same setup. So I'm going to brush through the type 3 because I'm really excited for the end. Now, type 3, I do want to caution you that it is market condition dependent. This means if the stock market is really hot and we're seeing stocks rip 3, 4, 500, 1,000% a day, I do not use the type 3. This type 3 is usually meant for more colder markets. So Right now, I haven't seen many type 3s because the market's really hot. Earlier last year, I was definitely hitting a type 3. Now, how I gauge if the market's hot or not is this website called Flash Research. If you guys want a free month subscription, also in the description down below. So how I gauge it is I like to see the average change from open. If there's a high average change from open, usually the market's really hot. April, it was extremely hot. December, also notably hot. But it kind of cooled off early in the year, so like I said, I was hitting it. October was a fantastic year for this because everything was fading. And then as you can see, these squares, if it's a light blue square, it means we had 100% runner on the day. If you don't understand this, just look at this. And if you see a lot of empty squares in between each other, just know that it's usually a colder market. If you see a lot stack up like 2, 3 in a row, multiple times a month, the market's usually a little bit hotter. Now, the type 3, what we're trying to do is essentially we're trying to catch a pump and dump. Yes, pump and dumps still happen almost every single day. What this means is a company will have a catalyst, basically trying to have some sort of news to pump the stock price up so they can sell their own stock. Insiders sell their own stock all the time. So in this case, I guarantee you this stock pumped like crazy just for insiders to sell. I mean, come on, it ended right on the day after being up over 200%. So it went from break even up 200% to red. Let's be real here. Insiders were selling like crazy. So what I like to do in this case is you have to understand the first wave is all greed. So much so that the initial move is over 125%, meaning this one move was up over 125%. That's insane. Remember what I said earlier in the day, if it's not up at least 100%, I won't short it? Well, that's usually after 5 clean waves in a few hours of trading. This is when a stock will squeeze like crazy in just a few minutes, but they can't hold on to that imbalance forever. So the stock must come down, and usually it comes down pretty hard. Again, all 5 waves of greed are in that one single wave. So as it squeezes, we go short. Now, we just don't short into the green candle. We wait for 2 entry conditions. 1, the first red candle to print. So we went short here. 2, a lower high. So you can see that as it came down, it tried to make a higher high here. It tried to push higher and it ended up making a lower high. So we added short right here and made money as it continued lower. That is a type 3, very market dependent. Would highly recommend putting this one on hold until you have a little bit more experience trading PC Concepts 1 and 2. Now for the finale, like I said, I'm going to show you guys arguably one of my favorite setups this year. Before we get on to the final entry condition, I wanted to let you guys know we're currently running a free 30-day trial for our premium Discord. Here, you guys get access to our live trading sessions so you guys can watch me make all this money live. I've made over $20,000 in the live stream so far this month, and we're only halfway through. You'll get our premium stock alerts, one-on-one support to get you on hammer, and complete access to our journal so you guys can start tracking your data today. If you need an accountability coach, I would love to be that for you. So if you want a free 30-day trial today, click the first link down below. And the last thing before we get onto our final entry condition, we are going to open up our Mastermind program again for the 2nd time this year. Here, you guys are going to work with me one-on-one and in-group setting every single day for 6 weeks straight. I'm going to teach you every single thing I know. I'm not going to leave a single card unturned. Click the 2nd link down below, book a call with me, and you'll talk to me directly. I only take on 30 students at a time, so make sure you book that call. Alrighty, now on to the final entry condition. Now what I'm about to show you is completely contradictory to the average guru out there. Do you guys have a mouse pad at home or a banner that says basic chart patterns that your average guru told you, hey, if you see a head and shoulders, go short, or hey, if you see a bull flag, buy? Well, I take their money just about every single time, and I take pretty much all of it. What I like to do is I like to have all these gurus pump these silly candlestick patterns. I really encourage you to try these out on your own if you actually think these patterns work, because I'm here to tell you they don't. So what I like to do is I like to look at one in particular. I like to wait for some sort of flag, you call a wedge, a flag, whatever you want to call it. I like to wait for the fake out. Now, if you don't know what that means, let me show you an example. The first one I took was MKDW, and honestly, this was one of the cleanest setups I have ever taken. I was very close to taking max size on this one, but as you can see, it squeezed 500%. 500%. okay, we had a solid PC intraday short. The only thing I didn't love about it was this pullback right here. As you can tell, it wasn't multiple red candles, but there was a halt, meaning this did indeed act as a 5-minute plus pullback, so it was valid. So you can see I did add right there. I'm gonna go back and we'll rewatch this. But I added because it was starting to break out of that wedge. And 105, 110 was my desired entry. I was getting filled at 104 to 105. So you can see I added a little bit more right there. And as it breaks below 1, I think this is game time. 1 is a huge psychological support. As you can see, it's already slowly starting to have a fake out, and then here comes the boom. So it's now below 1. Long traders are starting to stop out. Their stop losses are getting triggered. And I'm getting ready to take a little bit of profit as it breaks down. Just such a beautiful trade. So much money was trapped up there and just begging to get out. Now it's really starting to break down. I took a little bit of profit there as it really snaps down to the VWAP there. I am now up around 20%. And I believe this does get halted going down. You can see that the halt level, LULD, is indeed right there. Let's see what happens here. A bunch of sellers start coming in and boom. So this thing gets halted going down, and it's within 5 minutes after this, I was locking in profits around 75 cents for a 30% gain in less than 10 minutes. As you can see, I'm up over $5,000 in the morning. Not a bad morning. Let's look at one more example to really drive this point home. So this next example, I'm actually trading on my $100 budget build. Yes, I took a $10,000 short on a stock up over 400% on a $100, actually $85 computer. It is as insane as it sounds. If you want to watch that video, I will recommend it so you guys can go ahead and watch it. But as you can see, it starts to formulate a wedge near the top. Now your favorite trading guru would tell you as it breaks, buy it for the next leg up. And what I'm doing is the second it breaks, I start adding. Now I take relatively small size because I didn't have a solid 5-wave structure. I didn't even really have a fantastic lower high. So at the end of the day, this was just a para short. You guys know I take that with smaller size, but we had that fantastic entry condition that I couldn't pass up. So you can see I added when it broke, consolidates for a little while, starts bouncing around. You can see there's a $100,000 seller right there. I'm up only $600 in the day. You can see another seller just stepped in right there, and within seconds, stuck in a halt going down. I was up around $1,700 on it. Not a bad day's pay. That's gonna do it for today's video, guys. So if you learned something from this video today, please consider liking and subscribing, and comment down below any questions you have. Alrighty, on to the next video. Deuces.